Welcome back. American International Investment Management and Financial Services company Morgan Stanley last week declared they had become bullish on Nigeria's government bonds on expectations of a Bola Tinubu presidency. And fast forward to now, he has been announced president-elect by INEC. But how do elections in Nigeria impact equities and bond markets? Let's talk to Yomi Ajayi now, banking and finance analyst at Stairs. Good morning. Good to have you.
Good morning. Thanks for having me. Yeah.
All right, let's look at the equities market in Nigeria. Now, what's been the trend like, in election season? Because I did see the all-share index, it did hit the 55K level we've not seen for a while. Yeah. Give us the trend. What's it been like?
So recently, the trend has been quite positive, just barring any, single-day losses. But this year in particular, it's been quite positive, which is, maybe not unexpected, but then just surprising given the tensions leading up to the elections. But then post-election, still we've seen that trend has been positive. The only negative, the 2 days that it lost, the Wednesday when Tinubu was actually declared president, and then Friday, but then still week on week, the markets were still positive. Looking at past election trends, this is also not so surprising. So in 2019, we saw after Buhari was re-elected as the president, the market actually lost a bit because, I think there was more the market was favoring an Atiku win, who was the more market-friendly candidate at the time. But then when you now go further back to 2015, like you can see on the screen, right, when Buhari won, writing off his campaign of how he was going to end corruption and how, he promised 10% growth, economic growth. There was much more optimism towards his government, and that's why the market picked up then. But then after he came in and then Nigeria went into a recession, all prices slid even further. You're right, the optimism towards Nigerian economy dampened, and that led to the decline that we can see in the graph. But going forward, we still expect the market to be positive this year, regardless of who won the elections.
And with the NGX, we've had that discussion about, foreign participation in the market, how that has reduced. Do you see them coming back?
Well, so, the main reason why they left, and just to point out, if you compare the last election year, I think foreign participation in our equities market was about 50-something%. Right now, as of January, it's dropped to 13%. And if you look at why they left the market, it's due to capital control measures imposed by the CBN, right? So if that can be fixed, first of all, right, multiple exchange rates regime and then capital control measures, which are things Tinubu's presidency has said that they are going to work on, right? We can expect a little bit more optimism from foreign investors and more participation from them.
All right, let's look at the Nigeria's Eurobond market. Now, we see there's a disparity there with the U.S. Treasuries. And some say it's signaling some kind of, debt distress, at this point. And, we did see Morgan Stanley, claim that they were bullish, but there was a pullback. Immediately we saw some kind of contention about, the results and all that drama with INEC. So how are you seeing the Eurobond market spread?
So the thing to note is that why they mentioned that they were so bullish is because Nigerian Eurobonds have lost so much, right? And they are, anyone looking for bargain hunting opportunities can come into this market and speculate on these instruments, because if you can take the risk, there's a lot of returns. If Nigeria's macro outlook should change in the future, right, you would very much be in the money. But then what this depends on is that there needs to be some sort of radical movement, in terms of Nigeria's growth story coming up on Tinubu's presidency. The next president needs to be able to assure investors that things are going to turn around for good. in terms of oil production. So last year we saw oil production reach levels that we have not seen in about 40 years or so, and that's really dampened investors' confidence in the Nigerian economy in terms of government paying back their interest payments on their loans. So things like oil production needs to go back up. If the Tinubu presidency can also stick to the guns, stick to what Buhari has said about removing subsidies in June, right, that would also send a positive signal to investors, because what the main reason why they're afraid now is that they just feel the government is finding it increasingly difficult with debt servicing to revenues ratio at about 85% at the end of 2022, right? We know how dire that can be. And even though it improved from 99%, as oil production they're popping back up in towards the tail end of 2022, there still needs to be more work. More work still needs to be done, right, by the president. Looking at PMI numbers that were reduced as Purchasing Managers Index that was released on Wednesday, also as Tinubu was declared winner, that showed that Nigeria's that PMI contracted to about 44.7 from 53 points in January, reflecting the negative impact of naira scarcity, fuel scarcity that was particularly was really prevalent in February. So there are a lot of issues. Nigeria has many issues that the president-elect needs to be able to give some sort of
right.
Just be able to speak to it. In terms of who he even brings on to his cabinet, right? If these people would be able to solve the issues, if they are able to restore confidence to investors, so that would really play a large role in turning around our Eurobond story.
Right. So much for the president-elect to do that. And I'm sure he's rolled up his sleeves, ready to perform. We'll keep tracking, how the markets actually react to all of that. Thank you so much, Yomi Ajayi, banking and finance analyst at Stairs. It was great having your perspective. Thank you.